Welcome to All That Matters, a show about what's really worth your attention in the markets and economy today. Join hosts Michael Antonelli and Ross Mayfield as they tackle the latest headlines and answer real questions from clients.
Hi, welcome to All That Matters with Ross and Mike. We are sitting here in mid-December, last episode of the year. And so, Mike, I want to take some time to wrap up some of the big topics this year. But first, how was your 2023? How would you rate it?
Pretty good, Ross. I think I had quite an interesting 2023. I turned 50 this year. I kind of wrote a blog post about it where I was having a bit of a midlife crisis, but I'm through that now. I'm feeling pretty good. 2023, I think, will end up being a good year for investors, hopefully for our clients. Stock market plus 20%, I think, in the S&P 500 is 60-40, up about 14. The bond market helped this year. The bond market wasn't as bad as last year. Stock market's better this year. So I had a pretty good year, Ross. How about you?
Yeah, pretty good. Pretty good. No complaints. As you mentioned, I mean, the primary thing that we probably think about, or at least the world we live in, is how did the markets do? And it's been, I think against expectations, a really, really strong year. U.S. stocks are doing really well. International stocks have done pretty well. Bonds have done pretty well. So no complaints at all. But we are going to break this down into kind of what mattered for the markets. So we'll expand on this a little bit. What mattered in the economy, zoom out a little bit. And then what mattered for the culture, for how people kind of consumed the year and viewed the year. But as I mentioned, we'll start with the markets, and you kind of gave the highlights, but what actually mattered to markets this year in your opinion?
Right. It's a great question. It's something I've thought about as I kind of write my year-end wrap-ups, or as I talk to one final group of clients, like what really mattered this year. I'm going to say three things, and then I'm going to transition to maybe a bit more of a wealth management take. Number one, I think earnings mattered this year. Earnings stayed strong. Earnings grew this year. That's really important. Earnings are what drives the stock market. It's just how much money these companies making times what people are willing to pay for those profits. So earnings held in strong. That definitely mattered this year. Yields mattered. We talked about it on a previous episode. Yields are kind of this, what are interest rates doing in the world? The Fed was hiking them, and then now they've fallen for the past month. Those really, really matter. Watching those was honestly, Ross, like as we said a couple episodes ago, watching those are really what mattered. And then tech, the tech stocks did well. Some people bemoan the fact that the Magnificent Seven or whatever are the only thing driving the stock market, but we want them to be. Everybody owns these companies, Ross. Everybody owns the Magnificent Seven. We want them to do well. They're in all the large cap mutual funds and in the indices. So the tech stocks doing well helped the overall market.
Yeah, it would be a lot worse if they were doing poorly. It would be really hard for the other stocks to make up for that. So that, they had AI and that they had some earnings momentum and did really well is a huge boon. And was the market a little concentrated? Sure. But, the data shows that doesn't really matter for forward returns if you go back and look through history. I want to, we've talked about it probably 2 episodes in a row now, but rates have been so important this year because people are so focused on the Fed. People are so focused on the bond market. And I want to just do a couple stats. So on October 19th, the 10-year yield peaks at around 5%. At that point in time, the S&P 500 is up a little bit. The average stock is actually flat to down.
Yeah.
From there, the 10-year plummets down to closer to 4%. Markets go on this incredible rally. One of the best Novembers of all time, one of the best months in the last 30, 40 years for both stocks and bonds. And it's because rates came down. It's because, some economic data came in as the market wanted to see it, but rates plummet and the stock market took off and the bond market took off as well. So rates have been what mattered to this point.
Right.
And now you've got the average stock working, you've got the international stocks working, and it's because rates have given the market a little bit of room to breathe, even though they're not back at 0% like they were for the last decade.
I said I wanted to give a wealth management take. That take kind of expounds on what you said. November was one of the best months in history. I think it was like the 9th best month in the last 50 years. You just can't miss those. You just cannot miss the 9th best month of the last 50 years. It just really dramatically impacts your ability to reach cherished goals or to invest in the stock market. My wealth management take is what mattered this year is how you reacted to last year. That's really, really mattered a lot. Did last year scare you so much? Did the inflation, did it all knock you off your plan or knock you out of the market? Or did you understand that the world is about ups and downs, that being an investor is about ups and downs? So what mattered is, how did you react to last year into this year? Because at this year, like Ross and I've said, it's been pretty good. Ross, I want people to understand that ups and downs are part of being an investor. I think we do a good job at that, right?
Hope so. Yeah, because you're right. I mean, entering November, which again, one of the historic best months, ever, Bearishness was spiking. You can look at the survey data and see that people were feeling really bearish after a rough September and October. And if that caused you to pull out of the market or go to cash, you missed one of the great months of all time. Yeah. And that's the story of investing over, 10, 20, 30-year time periods too. You just can't miss those really great months. And the main way to make sure you do that is just to remain invested and stick on plan. So markets to the economy, we know that they're interlinked, but they do have their idiosyncrasies. So what mattered in the economy this year, in your opinion?
I have 4 or 5 things, but I want to start with the fact that there was a lot of negativity going into this year about the U.S. economy. There was a fair amount of strategists and firms talking about recession and talking about the fact that the yield curve's inverted, and we're dealing with the after effects of a lot of tightening from the Fed. Tough calls to make, Ross. These are just tough calls to make. To try to predict a recession or not a recession, growth, no growth, that's just a really tough call. So I don't want to minimize just how difficult of a call that is. But the things that I think really, really mattered this year was you and I, and whoever's watching this and whoever's out there, just the average consumer who is strengthened by a really good balance sheet, who is strengthened by a housing market that continues to be very, very strong, strengthened by a good jobs market. Inflation's moderating. It's still high. Inflation's moderating. But the simple fact that the U.S. consumer remains resilient and that they might have a 3% mortgage and home equity has doubled in the last 5 years, those are things that really, really matter. Not inverted yield curves and not all these technical indicators that we look at. What matters is what the average person is doing, Ross.
Yeah, and they're spending. As you mentioned, really strong job market. I think probably the thing that gives the people most confidence to go out and spend is, do you feel confident that you're going to have a job when you show up on Monday? The labor market is historically strong and has been strong despite higher interest rates and what the Fed has done. Real wages are up. People are making more money. Inflation is awful. People hate it, and it does hurt. But wages are surpassing inflation now, and people can feel that. The other thing, as you mentioned, higher rates have had an impact, but I don't think the impact that the Fed and a lot of investors might have anticipated, because we had a decade and one last bite at the apple in the COVID pandemic to lock in long-term debt at low rates. So for consumers, it's mortgages. Over 60% of homeowners have a mortgage under 4%. Like what a gift, what a tailwind for people's spending. And as you mentioned, when home equity is also going through the roof. And then for companies, it's the same thing. A lot of companies issued debt in the COVID-19 pandemic at really low rates. And so they haven't felt the sting of higher rates quite as much. That's allowed a year like 2023, where you might historically expect a recession or see a recession, to see an actually pretty strong economy. So job market, consumer, we're a consumer economy. The consumer's good. We can tell you how the economy is doing. And that's basically been the story of the year.
I saw this great image or heard this great take about what's called the bullwhip effect. So a bullwhip effect is when, say, you snap a bullwhip and you get this kind of up and down of the bullwhip, right? And we break the world during COVID and we start the bullwhip effect, right? We stimulate it, then it slows, then supply chains break, and then they fix. And this bullwhip effect is starting to narrow out. The ups and downs of it is starting to narrow out because we're now going to be 4 years past the pandemic. That's important. This inflation and all the stuff we're dealing with is just the bullwhip effect of what happened when we literally broke the world. And I think, Ross, that bullwhip effect is starting to, those peaks and valleys are starting to narrow. And as we go into next year, I think that will be a tailwind.
Yeah, we'll let's go to the next one, which is what mattered to the world and the culture, because I think this will be a theme of what we talk about here, which is that we are just another year, another month removed from the COVID-19 pandemic, and things are just, they're normalizing. So some things are getting better. Inflation is coming back down. Supply chains are healing. As we move past it, things are healing and normalizing. And we're seeing that in what matters to the culture as well, which I know is something you're passionate about. So floor is yours.
I'm hoping people skip just to this section because this is the section I was waiting for to talk about, because pop culture and vibes and what's going on in the world are, I think, drive a lot of the stuff we talk about. You could talk about earnings and, economic data and stuff like that, but the vibes, what's happening in the world, are what drive our lives and what drive how we interact with the world. So I have 3 things. AI, I think, really mattered this year. We may have created basically one of the best productivity tools since the computer. We don't know. I mean, I'm not making that call. Maybe it is, maybe it isn't. But AI is this kind of emerging productivity enhancer that might actually just, really, really put an accelerator into the labor force and into the economy. So AI, I think, really mattered. I think Barbenheimer mattered. Ross Barbenheimer, maybe nobody knows what that is, but Barbie and Oppenheimer, those movies came out at the same time. It kind of brought a cultural moment together. We all went out to the movie theaters together. Some people watched it back to back. I did not. I watched them separate. But I think it was a cultural moment. Don't minimize how important cultural moments are. And then that segues into my last one, which is, I really do think, this person really did affect the economy and the vibes. And again, one last time, it's Taylor Swift. I know you're tired of hearing me saying that. She was just Time Person of the Year, which I think is well-deserved. You just can't sleep on the fact of something so important going across the country, now across the world. It keeps consumer spending up. It keeps interest in cultural stuff. You may not like her, and that's completely fine. There are people like, stop talking about, I don't like her. Hey, do you not like to see people, Ross, do you not like to see people at peak performance? I like to watch people at peak performance. If it's an athlete or a singer or whatever, like, don't you want to watch people peaking?
Yeah, economic engine. And if, I'll say, if Taylor Swift's not your thing, I think the numbers on the Beyonce Renaissance tour are probably like pretty similar. And you're talking like, we're not talking about millions. We're talking about billions of dollars in economic
incredible
growth
artists
that just goes town to town and stimulates economies. And then, Barbie is like, I think a top 15 grossing movie of all time. And actually, what's funny is Super Mario Brothers, which came out in like February or March, people have already forgotten about, but it was like $1.5 billion too. As I mentioned coming into this question, the things from the pandemic are just normalizing. People are getting out, they're spending, bolstered by a strong job market, bolstered by, inflation coming down. But again, interacting with the economy, engaging, I think that stuff really matters. Two final things. I do think AI matters. I think it helped, people in the corporate world get excited about something and start spending at a time when it was kind of a question of what was the next driver of the market. Some of the guidance and spending numbers from these AI related firms is genuinely crazy. And then I think one thing I'll look back on and think about, we talk a lot about the labor market. We saw some of the biggest and most widespread strikes we've seen in decades in this country. So Hollywood, speaking of, Barbenheimer, UAW, auto workers, and a couple other big sectors. I think this will be an interesting year to see if demographics and the supply of labor have finally shifted in a way that kind of changes the calculus. I think 2023 could be remembered for that, as we're talking about this in 10 years.
Ross, let's end with like what we're grateful about this year. I have a couple things on my mind. I'm grateful that, I'm grateful that you and I got to do this show. I'm grateful that our firm allows us to do this. I have such a blast doing this. I hope our viewers and the people who truly, who we truly care about enjoy this, because I love doing this with you. I hope we do 100 of these. I hope that this just continues to grow. I got a chance to travel a fair amount this year. I saw a friend get married in London, took my family to a couple cool vacations this year. I'm grateful for that. And I'm just grateful I turned 50 this year. Like I said, it's just it's a milestone, but I'm grateful that I've made it this far and that I have friends and family around me. And Ross, I'm so thankful that you and I get to do this together. It's really been a highlight of my year.
Yeah, I agree. I appreciate, this was your genesis. Thanks for bringing me on. Thanks for anybody who watched sticking with us through the first year, because we can only get better. We're fine tuning our mics and our cadence. And so we appreciate everybody who listens. I'll say happy 50th because it wasn't all that long ago. So I think I can still officially wish you a happy birthday here. But yeah, just grateful for our clients, grateful for our great financial advisors who give us an opportunity to talk about this and hopefully make a difference in a couple people's lives. But it's a real honor. So at the risk of getting too cheesy, Mike, it's been a great 2023. And I'm looking forward to 2024. We'll have a lot of election talk. So
Ross, next year, should we just do 12 straight election shows? Is that what we're going to do? Is it going to end up being that? All right. Thank you guys so much. We'll see you next year.
Thanks.
Thanks for watching All That Matters. Opinions expressed in this episode belonged solely to Mike and Ross and do not necessarily represent the opinions of Baird. This program is for informational purposes only and should not be relied upon for any investment decisions.